Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to the video recap that we do here each and every night on the membership side of our blog. We are absolutely on a mission to help the retail trader like you learn how to trade options profitably for income. Now, having said that, we've got a lot of people who have just recently signed up for our 7-day free pass where you can get free trading alerts and this nightly video on our website. And a lot of those people who have signed up don't understand that even though we post our video each and every night to the membership side of our blog, you can actually get all of the archived videos before they go publicly on YouTube 10 days after they go to our members by just going to the membership side of our site and clicking the video tutorials section. So this will actually take you to a page that has all kinds of video tutorials in here. And if we just go scroll down a little bit, and you can see that the archived membership videos are right below here. And they're actually in this playlist. So this might be a little confusing for some of you out there who aren't as techie. I know I wasn't at first when I got this. But up in the top left-hand corner here, and let me use my highlighter, but up on the top left-hand corner, there's a button for playlist. And so what I do here is I actually archive all of the videos that I send out. So all of the videos just for members and all of the nightly videos are archived right here in this playlist. So you click playlist, and then you can see all of the different videos that we've had archived here recently under this new system that we're trading. So all those videos, you scroll all the way down to the bottom, and that'll be the most recent one that you have down here, and that's the one that we published just last night. So again, you keep scrolling down on this page then, and we have all of the different playlists for options trading basics, bullish strategies, bearish strategies, neutral strategies, risk management, stock chart patterns, etc. You name it, we've got it. Hours and hours of video tutorials for you guys to go through. So, having said that, let's get to the trading alerts that we have here today. It was only a very quiet day. We just had 2 opening trades, no closing trades. I really wish we would have gotten into the JCPenney trade that we were trying to enter today, which was a put spread below the market since it popped after earnings, but just couldn't get filled. I know some of you out there are already filled on that one and had told me about that in advance, but we just couldn't get that out to our members today. I couldn't get any fills, that's for sure. But today we did make 2 trades. We sold 2 call spreads, and the first call spread we sold was in FSLR. Now, First Solar just had earnings released last night, so today it opened up much lower on after the earnings release. Implied volatility in the morning, though, when we actually entered this trade, had not started to move lower. So we actually entered this trade when implied volatility was above that 50th percentile that we talk about. And we sold the 55.60 call spread for $1.09. A little bit less in premium than we usually like to get, but I wanted to get into this trade because where we had sold the call spread, and this is a chart of First Solar FSLR, where we had sold the call spread at 55 with $1 in credit puts our break-even price right around 56. So what that does is that leaves us a little bit of room for First Solar to recover after earnings and then continue lower. And sometimes what happens with these stocks after they have this big gap move down in earnings is that they move back up and do what's called a fill of the gap. So this huge gap that we have between yesterday's price and today's opening price is a big gap in the charts, and we tend to see a gap fill, and that also acts as an area of resistance going forward. We see this a lot of the times. I have seen this before in the past with Twitter and with Apple and with Google and Ford. Happens a lot. So I wanted to get this trade in, but it also leaves us a lot of room to be wrong, even if we're not directionally right off the bat here with First Solar. And in addition, implied volatility has already started to drop, which will obviously help our position long run since we are short net options. The other trade that we made here today, and again, this will be a short video because there's only 2 trades, is Tesla. So we sold a vertical in Tesla. It was the 280, 285 call spread. And you can see we got a little bit more in premium for that one. It was the same $5 wide strike as the First Solar type of option spread that we sold above. And really with Tesla, the whole idea here was that Tesla has been moving up considerably since earnings. Now, earnings have already come and gone, and you'll notice that it's gone virtually parabolic here in the last couple days. And so what we're doing here is doing nothing more than taking advantage of high implied volatility. It's in yellow, but you can barely see it. It's 53 percentile. So taking advantage of that, and also that this is just an unsustainable move at this point for Tesla. Not that I don't want to get in front of a train, and I don't think that Tesla could go higher, but at least the rate at which it will go higher should continue to drop now that earnings are behind us. So earnings are out of the way. usually what happens is people are going to start taking profits, at least at these levels. I think people are going to start taking profits. But our strikes are all the way up out of the chart here, way up above where the chart is now at 280, 285. So again, we're leaving ourselves room to be wrong. Even if Tesla rallies up another $15 from here, we still have plenty of room between where we are now and where Tesla is going to be in the future. So that is very, very comforting for us, and also adds to our overall portfolio of net credits that we are starting to really build. A lot of the portfolio now is starting to get a little bit tilted towards the bearish side, and that's okay. I'm actually okay doing that. It's not that we have to be neutral on our deltas all the time. You'll notice that the SPX continues to trade higher, but it's still having a really, really tough time breaking past these highs that it continues to run up against. And you'll notice that the last couple of days we've rallied above this, like we were going to break the highs and then came back down. So this is really not a good sign for any of those of you out there who are bullish on stocks in general, the SPX, the IWM, the Qs, the DIA. This is really not a good sign. We really need to see, if the market's going to continue higher, a strong break above this level and a close much, much higher than where we are now. And if we get that, then we'll start tilting our portfolio a little bit more bullish. But until then, I feel like I'm going to err on the side of caution and tilt a lot of our trades towards the bearish side, anticipating that people are going to start taking profits here fairly soon after the move off of the bottom. So as always, I hope you guys enjoy this video. If you have questions or comments, please always add them right below the video. I'll get back to all of those tonight or tomorrow before the open. And hey, if you guys think this video has been really helpful, please help us spread the word by sharing this video on Facebook, on YouTube, and on Twitter. As always, hope you guys enjoy, and happy trading.